The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, are traders already squaring up positions ahead of Friday's January USDA WASDE report? It seemed that way, at least, with a very quiet trade on Tuesday in the grains and oilseeds, largely unchanged to slightly higher in the wheat market. The dollar rebounded a little bit. There's another strong day in cattle, particularly feeders, as well on Tuesday. Let's take a look at these markets and get some perspective. Joining us for conversation, Tyler Schau with agmarket.net is with us. Tyler, good to have you back with us here on Market Talk. Happy New Year to you and yours. Thanks for joining us.
Thanks, Jesse. Always good to visit with you. And yeah, Happy New Year to you.
So I guess the big thing for me to start this off, and we were chatting a little bit off air, we got this big USDA report coming up on Friday that there's going to be a lot of data that's going to be thrown at the market. And regardless of whether you're a fan of the reports or not, I know there's the camp out there that doesn't really think they matter that much. But regardless, they impact the market. I'm just wondering, are we already starting to see positioning in the grains ahead of that report on Friday? It just felt very quiet on Tuesday, Tyler.
Yeah, it does. You know, you had a pretty fascinating rally post New Year's. In between Christmas and New Year's, a big sell off there Thursday, Friday, first couple trading days of the new year. And then we come back in tomorrow or yesterday, and it's just kind of a little bit head scratching. Corn was back up, and in the scheme of things, we've really kind of gone, I won't say nowhere. We're just kind of treaded water for the last week, and yet had some pretty big up days, pretty big down days. I think what was it? Friday was the largest daily move in corn we'd seen in 3 or 4 months, it seems like. So it feels weird after a couple of those big movement days to say we've just kind of treaded water in here. But when you take a look at the chart and you go back just a week and a half, we're kind of right in the same spot we were. So a lot of it has to do with what you've talked about with the WASDE report coming out Friday. We got the commitment of traders report yesterday, and I guess what was kind of impressive was just the size of the fund length for corn. The fund length on soybeans had increased considerably. I mean, they're short still, but they had bought back quite a few of those short positions in the week prior. So just a lot of squaring up. I think there's a lot of conflicting news out there leading headlines, and it's one of those markets where people aren't really sure whether they should stay put or jump over the moon.
I think with the conflicting headlines, let's touch on South America a little bit. Some of the latest forecast model runs I'm seeing and hearing Tuesday, things are turning a little wetter for Argentina, supposedly. But then again, that's been an area where the dryness has been getting worse and worse, stretching into southern Brazil. Sounds like some locals are not too concerned about it, but I guess that right there is one of the big things that it's kind of, we don't know which way to run necessarily when it comes to South American weather right now.
We don't. It has been drying. It's been drying down for the last month in Argentina and southern Brazil. The most forecasts I've seen today still leave the dryness in there for the next 2 weeks. Some of the forecasters we talk to, it's a concern they've got. However, like I said, that near the end of the next 2 weeks, they're kind of pumping some rain. Some of the models are into Argentina. Now, the one thing I will say, and trust me, I'm no meteorologist. I don't even play one on TV, but they tend to, our forecasts aren't real great much past about 6-7 days. And let's be honest, if you pay attention to your local weather, they're not that great much past a couple days, or at least where I'm at in North Dakota. But as you get further out, the models tend to drift back to quote unquote normal weather. Does that make sense?
Mm-hmm. Yeah.
So, when you get out to, when I look at a 14-day forecast, and we're in a dry period, and at the end of 14 days, they're saying, more rains near the end of the 2-week period. I generally don't get too excited about that, just because of the fact that, they're probably going to drift towards what normal is. So they're kind of pumping in some normal rainfall. Now, if we start moving forward and that stays in that same time frame, so 3 or 4 days down the road, it's now 10 days out, and then now 6 days out. Now I'm going to start buying into that forecast a little bit more. As of right now, though, you're going to see those models come out. They're going to add it. They're going to take it out. And that's probably the more important thing to be paying attention to. But it does have the market's attention. And I do think that's why we saw some pretty heavy buying over the last week or two in soybeans, and why that fund position had went from fairly sizable short to, I think they lightened up like 28,000 on the commitment of traders from yesterday afternoon. So that's probably where some of that's coming from. On the flip side, the alternative news, got some news early yesterday morning when we got into the office that there were rumors floating around that Trump, the tariffs were only going to target essential imports, which I don't really know that anyone knows what that even meant. Trump came out later in the day, said that was bogus. He didn't say that. And he's kind of banging the tariff drum again. So that's got a lot of the market spooked as we move forward.
Yeah, the tariff talk, there's the talk of retaking the Panama Canal that's being thrown out there, annexing Canada, buying Greenland. There's so many things on that geopolitical front that are definitely going to be watched. I think the biggest for ag is tariffs and maybe the Panama Canal here moving forward. But those are largely things we're just going to have to see how it plays out and not control. I wonder, though, something we can control is farmer selling. Felt like maybe, especially we saw to, post New Year's, but also maybe even on Monday a little bit. We started really strong, and then we kind of faded in row crops. I mean, did we see some farmer selling come in here already early this week, Tyler?
Yeah, we know there is. One of our partners that we work with very closely is John Stewart and Associates. They're a commercial brokerage. We get the temp or the pulse of the country buyers and the elevators and what's going on, and that's one of the conversations we've been having in the morning, that they are seeing farmer selling. Another way to gauge that, look at the corn managed money position. They're long 220 some thousand contracts. They've added a lot of contracts over the last month to their fund position or their net position. And yet we've only, in essence, really gone up about 10 cents in corn. And then the other one to pay attention to on that commitment of traders is the merchant or the producer position. And they went from, it wasn't all that long ago, they were flat on their position. They're short 400 and some thousand. So that tells us there's a lot of farmer selling. The commercials going in and shorting the board once they're taking ownership of that corn from the farmer. And then anecdotally, I talked to farmers out here in Western North Dakota. They said, one in particular said they were picking up a corn pile and hauling, and he said, before Christmas, a couple weeks before Christmas, they could take about 15 to 18 trucks of corn a day to the local ethanol plant. They're now down to 6, and that's just because the trucks have to wait in line for 3 hours to dump. So that's all just occurred within the last 3 or 4 days. So a lot of farmers waited till the first of the year and are starting to get that crop moving, and that's kind of the story all over the country.
What do we do in terms of our risk management here ahead of Friday's big data dump? I mean, we're going to have a WASDE. We got winter wheat seedings, canola. I mean, there's so many data points that come out for the January report. Is there anything that we need to be thinking about for our risk management here across the board, Tyler?
Well, I mean, I would say, it depends on the position you're in. And, I work with a small book of business and got producers that are anywhere from 100% sold on old crop and 50% sold on new crop to producers that have sold very little of either so far. So, it would be very dependent on the position and how I approach that. But you do got to take a step back. I mean, we talk, let's look at December 25 corn at 446 here today. Early talk right now moving forward is 95 million acres of corn. They're going to attach a 181 plus yield on it when we get our first look at the projections there in late February. And as we move into the spring and get our first WASDE expectations for the 25-26 crop, you're looking at some a lot of corn. coming at us. And you start plugging in early projections on a balance sheet and just kind of what we're hearing, what we know: 95 million acres of corn, 181, at least 181 on the yield, likely even higher. And you keep demand the same, which right now is pretty robust demand we're seeing in corn. You're still talking a 2 billion plus bushel carryout on corn, which in our books doesn't scream $4.50 corn. So that's something I think's got to be looked at. There's a lot of ways to play that game too. The CME's done a really good job of introducing short dated options on new crop futures. So if you've never used those, they're a good tool. They cut down on the time that you're buying on the option for protection. Um, and if you've never used them, reach out, find someone that has, talk to a broker. They can walk you through them. There's weekly options. If you just want something on some old crop that's in the bin to protect through this Friday evening, even you can buy a January week 2 option on corn and beans that'll protect you through this Friday, protect the March board. And so there's strategies out there that you can use. And again, like I said, it's dependent on where you're at right now with all of your other positions. But if you're undersold, I think you definitely got to use these. Where we're at. Bear in mind, we're dang near 50 cents off some of the lows we saw post harvest on corn. We're 40, 50 cents off those lows in beans, and we just feel like those are areas where we should be rewarding this market.
Tyler Schau with agmarket.net's our guest analyst here today on Market Talk. I should ask you the wheat market just real quick. It's been so beat up. We saw the dollar pull back here, but then start to rally again on Tuesday. I know that's been a big catalyst here, but for you, as you take a look at the entire wheat complex, I mean, what do folks need to be thinking about here, trying to manage this environment that's it's been tough to look at, quite honestly, Tyler?
You're exactly right. It has been a tough market to be in. We've just really not seen any type of a rally that, everything's got capped. And when our producers look at their cost of production, it just doesn't match up with where they can sell and stick money in their pocket, especially if we look at new crop, out to the next year's crop. The one bright spot, and I've been cautious to get bullish on wheat just because of this. We have been seeing the world ending stocks come down, right? And when I first got into this business handful of years ago, one of the guys I worked with would constantly say, one of these days in my lifetime, we'll see world ending stocks drop. Well, we finally started seeing that the last few years. That's continued. We're still seeing world ending stocks on wheat drop. The problem is it hasn't dropped enough to where we've seen demand increase in the U.S. Or foreign demand for our wheat really pick up. And our wheat exports have been okay, nothing to get super excited about. If we could see that, I think there's a story there. But you're exactly right. The headwind is the U.S. dollar, and while you might want to argue our economy isn't that great, it's evidently greater than a lot of the other economies out there, and therefore competitive forces just keep propping that dollar higher. It's just really hard to push wheat out the door when you're facing those headwinds. So I wish I had some better news. One of the problems I think we're going to continue to see is I do believe that the genetics in the wheat space are starting to catch up with genetics in corn and beans, which just creates more headwinds as we move forward. We had some outstanding yields the last couple of years in the northern plains, and you can attribute some of that to the weather. We did have good weather, but I think a lot of it's the genetics that we're starting to see being produced on the wheat side as well.
Good point. Very true. Cattle. Let's talk about this cattle market. Feeders, another strong futures day Tuesday. Fats were up a little bit as well in futures. I know you look over at cash. I mean, that's continuing to rock and roll as well. I guess I'll just ask you here, Tyler. I mean, what's your overall view of this cattle trade? It just feels like it just continues to work its way higher.
I've most of this rally through October, November, and early December, I was kind of leery of it. I was expecting this thing to break at any moment, and a severe break. Now, bear in mind, it's cattle. What I try to remind customers is limits on feeder cattle are like $9.50 in a day. And that's not meant to scare you. That's just the realist in me. We've seen it. We've seen feeder cattle break $6-7 over the last couple of years on a day for really no reason at all. So that is something a person needs to be cognizant of. The fundamentals are strong. Demand is hot. Choice box beef was 320 some bucks. Demand is not cooling. I think that's awesome. There's nothing I love to eat more than a steak or a cheeseburger. So the fact that everyone else apparently is eating it too, I think is awesome. I've got a lot of good friends up in this country that are cow-calf operators. They work their butt off. They're out feeding cattle this morning when it was 15 below. They deserve a windfall for all the work they put into it. But at the end of the day, you've got to look when the price of a put is to get you all the way out to next fall, late summer, early fall is the same price of a daily limit move, and it's at the money. Or LRP is slightly less than a daily limit move, and we're near record highs. 270 on the board. We touched that last February and March, and one time before that in September of 2003. But this is rare air we're back into. So I think, every time we've been up at these levels, every producer I know or that I talk to has gotten really excited. Maybe don't do enough, and then they're scratching their head $30 lower, wondering if we can do anything. So the old adage, buy puts, manage risk when you can, not when you have to, kind of rings in my ear here right now.
And, you mentioned rare air and all this happening on a traditionally January, not a great month to market cattle, is it, Tyler?
No, it's not. It's one of those things. I think I still contend there's a changing dynamic, and the seasonals are changing slightly. And some of that just has to do with the way the operators operate now. There's a lot more calves that get held back, run on grass the next summer. So it's just kind of changed the way those seasonals have worked a little bit. And then, the biggest deal is just, I think the cow herd's a lot smaller than anyone was anticipating. Some of that was offset over the last few years by feeding cattle heavier for longer. And at some point that was going to catch up with us. Feels like we're kind of meeting that time frame here.
Tyler, any final thoughts for us as we close it out here today? Anything else you'd want to add or reiterate to folks?
I'll go back to my comments on corn. We're at one point we were staring at sub $4 on old crop corn. The December board went below 4.
Tyler, hey, I lost you. There, you're back now.
Sorry about that. December corn was below $4 at one point earlier this year, and we're back up in the 450 range. If you were looking for a rally, you got it. And the question is, what are you going to do about it now?
Well, we'll definitely be watching that closely. If folks want to reach out and have a conversation, I know they can contact you, the team there at agmarket.net, or they could sign up to attend the Farming for Profit Price Conference coming up here in just a few weeks in Nashville, right, Tyler?
Yeah, that's the first weekend in February, a Sunday, Monday in February, and we're looking forward to meeting up down there.
You can find more details, agmarket.net. Tyler Schau, good to talk with you, my friend. Thanks for joining us today. We appreciate it.
Take care, Jesse.
Make sure to subscribe to the Market Talk YouTube channel. There, you can watch our latest interviews with the top market analysts in the country, find bonus content, and much more. Just go to youtube.com/markettalkag and hit the subscribe button, or you can search for Market Talk Ag on YouTube.